Traders are going to be wrapping this week up with non-farm payroll coming out in a few hours. Let's talk about it here at Capital Markets. Traders, welcome back, guys, to Capital Markets. It's your host, Cleveland Bishop. Hope you guys have had a rock star week so far. Last week, we saw a lot of volatility in markets, and I want to talk to you guys about that. But before we get started, I want to make sure you guys are subscribed, okay? So click below that subscribe button, and if you guys ever have any comments or any questions, just hit us up down below in the comments section, and I'll personally be right there to answer for you. Okay, so guys, we have had some interesting events come about in the market here. I'll show you guys a quick screenshot of the Euro USD. Currently, right now, we saw the Euro USD touch at the $1.15 mids, $1.1550s. Okay, that was after we heightened rates last week, which many market participants expected that we would do. Obviously, we were at a 90% likelihood that we would be heightening rates with the Fed fund rate. But what was interesting to see so much strength come into that market. Now, we were in consolidation, but a lot of folks thought that that price, that rate hike was already priced into the marketplace. All right, so we sat up there at the $1.17s. We couldn't quite get outside of that $1.17 structure here. Again, a quick screenshot, but we did. All right. And so what's interesting is now that we have potentially priced in this new rate hike, again, we're still in this consolidation, but can we break outside of this general consolidation on this Euro USD where we have seen markets go down as far as the $1.14s? All right. So again, we have NFP tomorrow. Jobs have been strong in 2018 and especially in Q3 and Q1. Q2 was a little bit of a lackluster quarter, but we are expected to see some more growth here in Q4 as well. With the markets hitting all-time highs, the S&P 500 again back at all-time highs, there is obviously still a lot of confidence here in this U.S. economy. All right, so we're going to keep an eye out on NFP. What comes along with NFP? Average hourly earnings, unemployment claims, and that's stuff that we're going to be obviously taking a look at. Now, what I am more interested in taking a look at is the actual unemployment number. All right, percentage-wise, we're at 3.9%. We actually ticked up a bit. Okay, we were at 3.8%. That was the lowest point that we've seen this year. But last month's reading, we did tick higher, and so now I'm interested to see if we continue that progression. Here's a quick screenshot of the cyclicality. All right, if you look at over 40 years of unemployment, we have seen markets never trade as low as 3.5%. Okay, and usually they're right around that 4%, 3.9% area. So this is usually the lowest it gets. And so now the only thing we're waiting on is really to see how long we can sustain these levels of growth, right? And so we've seen labor shortages all over the United States, a lot of labor shortages in the construction arena. They're building homes in real estate faster than ever before. And again, that's just because of the rambunctious economy, low money. All right, you guys got to understand interest rates relative to the past are still at record lows. Okay, you can get loans nowadays for 3%, 4%. Okay, almost and really no money down in some instances when it comes to buying a home. So again, we are still in this low money, easy money mentality when it comes to monetary policy, and that is just really speeding up the economy. Some folks that think that we may start to see a construction bubble because there's so many participants in the construction arena. When those jobs potentially start to get lost, that might start affecting other parts of the economy. All right, so that's what I'm going to be keeping an eye on as well. Now, moving on over, I want to talk to you guys about the pound. Pound has seen a tremendous amount of strength, and then we saw a tremendous amount of weakness. So last time we talked about the pound, there were hopes that Merkel and the guys over in the Eurozone were going to come together on an agreement when it comes to Brexit, but we have not had that agreement. And we also just had a statement come from Merkel saying, hey, if we have to fight for this and if we have to fight to leave this union on our terms, then that's just going to happen. That brought on a lot of fear for the UK economy, and we saw a lot of weakness come into the currency after the fact. Okay, so that's something interesting that we're going to keep an eye on. If you're not seeing what's happening from a Brexit perspective, folks, it's going to be important for you to assess that market as well. And you guys can read up on all the different articles that we post over at capital-markets.com. We'll be talking about everything detailing Brexit on a weekly and bi-weekly basis. Now, finally, it's good news for Canada. We did just hit off on a trade agreement. You guys can take a look at the Canadian dollar versus the US dollar here. You can see a massive amount of strength just came into that CAD, and that's because finally we have a Mexican trade agreement and we have a Canadian trade agreement. All right, and so this is now doing away with NAFTA, the agreement that was struck about 30 years ago because of Trump's new policy. He didn't want a trilateral agreement, he wanted a bilateral agreement between both countries. But anyway, again, Canada Australia looking pretty good. Free trade across the border from the United States, and it does seem like that is going to be a little bit more of an optimistic thing for the Canadian economy as well. All right, so guys, look, if you want more information on what is happening in these markets, head over to capital-markets.com. You guys can get your broker started, and it's very, very affordable because we have some of the tightest spreads. So if you're a new trader and you're looking to get into business and you don't want all those costs, head over again to capital-markets.com. You're going to be paying less and less per trade, and you'll get filled instantly because we route from some of the best liquidity providers. All right, guys, I'm Cleveland Bishop. I'll talk to you guys tomorrow.